Hello, traders. It is 8 a.m. Chicago time on Wednesday, the 14th of September, 2022. Thanks for coming in on this morning for episode number 2314. Of course, I recognize that it's morning, my time here in Chicago, but it's afternoon, evening, nighttime elsewhere. We have traders tuning in from everywhere, all around the globe, which I'm very, very thankful and proud of. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. So, what do we have today? Today we have a market that is just exhausted. It's an old market. It had to run yesterday to catch the selling train, and then today it's sore. It's got ankle and knee pain. Its hips hurt. And so it is just on the couch, rolling around, trading the same prices. But it actually, the market got home yesterday after its sprint, and it collapsed on the floor, and it's just spent the whole evening on that same floor, just rolling around, and it's not able to pick itself up. So that's where we are. That's a pretty colorful analogy, I guess. But that's where we are. The market's in balance currently across the board. Europe's selling off a little bit. The risk posture is mixed. The markets are really holding at this point, really anticipating what the September 21st Fed decision meeting is going to do. That's the next key input. There is some interesting news. China has been a bit of a drag or a risk overhand globally with the zero tolerance policy that they've had. And what China is doing is it's actually in talks with Moderna to finally get the mRNA vaccine for its people, and that's likely to reduce the incidence of these shutdowns. This is a pretty decent boost for the global economy, since everybody's factories in China. And so that's where that Moderna news plays in. Russia, Ukraine, things are pretty ugly there for Russia. It just doesn't look like there's much that was gained. There was a proposal sent, or an offer sent to Putin with some sort of reconciliation effort. We'll see how that plays out. It was rejected before, but Putin may be open to it now. Looking at the calendar, this morning we did get PPI. PPI came in actually better month on month, negative 0.1. This is the producer price index month on month for August. Came in at negative 0.1%, expected at plus 0.1%. Core PPI, however, was higher than expected, higher than the prior 0.4%, prior 0.3, expected 0.3. And then this morning we do get the gasoline and crude oil inventories from the EIA if you're trading crude. And then this evening we get balanced trade out of Japan, the RBA bulletin out of Australia, and the unemployment rate out of Australia. Tomorrow, just as a preview, there's inflation information out of France, retail sales out of the U.S., and then a bunch of numbers out of the U.S. that are lower tier, and then industrial production out of China. So not much to play for here in terms of the schedule, but it is very likely that Fed heads would have something to say about yesterday's CPI release. The market is left reeling. I am actually actually blown away by the extent of the selling. Given the structure that we had, it really tested and held key areas that I mentioned yesterday, but in the afternoon it just could not it just could not stop itself and ended up just blasting through and pushing through some really big key areas down below 3960 and so on in the S&P. The S&P currently has traded 325,000 contracts, very heavy, well above one standard deviation. The inventory is 69% long. In other words, 69% of the volume for the session has occurred above the settlement price. The range is quite normal at 37, but it could not, there was talk, I think I saw one of the Wall Street Journal articles this morning that came across my phone, was the market bouncing, but give me a break. That bounce this morning didn't get anywhere near the magnitude that I would want to write about. So to me, we had a like a 4 sigma close to close selling day, more than 4 sigma close to close selling day yesterday, and that is clearly impulsive. It is clearly meaningful. And given that there was an impulse yesterday, I expect continuation today or tomorrow. Today may be a resting day, but look at where we are in the S&P. We could not lift off the bottom. We'll talk about that a little bit more. Point of control is near settlement, and it is likely to continue lower, at least retest that low. Okay, so that's where we stand currently. Crude taking a bit of a bounce, but crude really is in a wide range right now between 83 and 89 or so. It's just sitting sideways. Crude is much, much stronger than the other products. Let's take a look. Here we are. I would prefer to use the adjusted data. So this data is properly back adjusted. Edge Pro X does not have a good mechanism for doing that yet. So we're going to look at this data, and what we've done is we put in a low of 39.05 down here and have bounced, right? So we bounced. We started one-time framing up in about a week ago, last Thursday. Friday we gapped up. We gapped up pretty good, and on Monday we had another gap. We gapped right up into and towards that 41.58 and a quarter. 41.58 and a quarter being the most valuable price in this region right here. This comes to us from June. It comes to us from August, right in here. Every time we're in this area, we go into balance, and we're building stronger and stronger balance here. So 41.58 is a key number. We hit 41.58 in the overnight session yesterday. We went as high as 41.75 on the CPI release before the sell-off, and then we sold off post CPI, opened at the low. We attempted to be responsive. We have, excuse me, let me clear my throat for a second. We had an open auction out of range yesterday, but look at where we are. Let's not lose the context of where we are. We basically came right back in to this balance area the last couple of weeks, and from that balance area we deducted that 40.11 is the key balance price to test down below. So the numbers that I shared with you yesterday, 40.11, 4.004, 39.98 were the key numbers I talked about. I'm expecting support as we push towards the 39.98. I expected support there. and we'll look at how that responded. So that's the 11 right here. We break through, and then we start to work ourselves down into the 39.98, which is the most traded price from last week. This is the freshest auction we've got longer term. But despite the damage that was done to the buyers, really the S&P is much higher than where it was in June still, right? In fact, it's higher than where it was in July. We're one time framing neutral on the weekly. So the weekly last week put in a lower low, higher high. Friday gapped up, put in a high over the prior week. And then this week so far, we've got potential, believe it or not, for one time framing up. One time framing up. You can see that the week so far, made up of 2 days, is still higher. As long as that 39.05 stays intact, we're in pretty decent shape. Okay, the low of last month, right in here. This is the low of last month, and so we're not, despite the way things looked yesterday, we're not in a, oh my God, this is a crash type of territory. This has cleaned up some of the weak structures left behind from last week. Let me zoom into that a little bit. So look at the structure that was left behind from last week. Let me grab the profile. Look at these structures. Very poor. I talked about this last week. Very poor structure to work with last week. As soon as we took out this this high here, 40-30, 29-ish, we had pretty poor structure into Friday with a big gap, and we repaired some of that. But in repairing it, we have poor structure above us. So this is really, so what am I saying? What I'm saying is that what we're seeing here, what we saw last week, is responsive buying into balance. This is responsive buying into balance. Okay. What we saw yesterday is initiative selling away from the big balance, responsive selling back to the last 2 weeks balance. Do you follow? Did I lose anyone here? It's very simple. So if yesterday had opened here and had pushed down, I would be a whole lot bearish. And this is what I warned about yesterday. I warned that, hey, I'm not going to go crazy trying to catch this drop below, if it gets below 40.11 into 4,004 and 39.98. We're moving back into balance. It is actually responding into balance. I expect it to stall out in this area. It ended up breaking in the afternoon. This portion here ended up breaking in the afternoon, but that was correct. I expect it to come back, base here, and hold and close. And then we are basically back where we were last week and where we were the week before in terms of balance. So nothing dramatic is going on here. Yes, the CPI number was hotter, a little bit hotter than expected, but it's not as hot as the prior. So a bit of a market overreaction, but given the statistics, remember we're somewhat quant based as well. Given the statistics of the range here and how it closed, we do expect it to. The expectation, because of the way it closed, is that it did not find buyers. We don't have an excess low after all that selling, so I expect it to dig deeper towards 39.05 to find those buyers to come back into balance at somewhere around 4,004, 4,011. I'm not sure where that's going to end up being. We're building a little bit of a prong here in the 39.92 area, 39.90, but we'll see. But don't go crazy thinking there's way There's, and this is the big picture, right? But all of this analysis, you take it, stick it on a shelf once trading starts. And then from the time trading starts, you're aware of, we just had a massive selling day on a pretty high stat range to the downside. So we expect some follow through. That's one. Two, we are actually in balance of the last 2 weeks. So don't go crazy trying to sell these rips down. The balance, the point of control is now above us, so there's a little bit of an edge to the buy side if we start to turn up. The move up to 41.58 simply tested that balance, and I expect us to get stuck between this 39.90 area and the key balance of 41.58. So those are the big conclusions that we come out of. We have a slight tilt to the downside, coming into today's session, but the bigger picture, the higher time frame, right? The bigger wind or the bigger tide is that we are in balance. So don't go crazy trying to sell the hell out of this. That's the point I'm trying to make here. Okay, so back to Edge Pro X. Let's look at what we've done so far. Let's turn the DOM off. So here's what we've got. We've got a market that sold off. Boop. We opened right here. We had an open auction. Okay. The open auction went to 40.17. Remember, we wanted to see, we expected to see 11, and it ended up spilling through. Wow. Somebody's drilling at this hour. Do you guys hear that? Pushing through to the 11 is what was expected. The balance of the last 2 weeks at 11. But the key number to test is the 98. A lot of construction going on around me. A lot of development. 98. Look at where it rested right here. This is where it rested. You see this bounce? That's 98. Look at this beauty. Pulls back to, I'll zoom in a minute, pulls back to the 40.17 IB low, the 40.16 and a quarter VWAP, and falls right off. I talked about this during yesterday's Convergent Trading trade talk as a key trade. Expected it to push back, retest this low, consolidate, and finish a little bit higher. But here in the afternoon, sell programs kicked in, and boom, they extended this move here is much higher than this move here. There was nothing holding these things back. Very poor structure to the downside. Lots of single prints to the downside. And then in the overnight session, we end up putting up a channel, a buy channel that we broke out of, and we're holding sideways. Where are we now? We are, let's zoom in. We are at the point of control, full session mid, full session VWAP, completely balanced. So as we open today, if we don't see buyers come in and see these prices as bargain basement, this 39.60 area is key from the past. There's a stock zone there. If we don't see this 39.60 as cheap, as soon as we open today, it is likely to take out yesterday's low. Very, very likely. So if we open on top of this 39.60, on top of the point of control, VWAP, mid, we chop around and we don't get an impulse that pushes us higher and starts attacking the overnight high, in which case if we attack the overnight high, we're likely to push into 39.75, the top of the first string of singles, and then to push right here, 75, and then to push through back to the 17, the 40.17 above. If we don't immediately buy, and you'll see this as very aggressive, it's an open drive, open test drive type of open where it just kind of rams through on good volume. If we don't see that, then I'm leaning short. My plan is to lean short, look for an internal gap to settle trade. So that would be 39.60 to 39.50. And then once it settles, likely to chop around and then start attacking the overnight low. So now we have the overnight stat to the downside at 39.42. Once it gets the overnight stat, look for a pullback, and then it's likely to ram right through yesterday's low in this 39.38 area. So I'm looking for that low to be gone. So far as relative delta, this is crude, this is the S&P. Relative delta, you can see very large lots starting to sell. The small lots are selling, and they're offset momentarily. They're offset by the large lots, but the volume is on the small and very large size side. Be careful using the relative delta into the expiration. We still are in the roll. The roll is mostly done. Tomorrow morning, I expect the roll to be completely done to reach its maximum. And then we could start using the delta maybe Friday morning, the day of triple witching. So I know that's a lot to look at, but I'm expecting, unfortunately, this is not adjusted, so this is not correct. Cannot rely on those charts. Overall, I'm expecting it to make a push to the downside. The wind is with the shorts right now after such an impulsive day. This will be an impulse and then a continuation day. But if buyers step in and see bargains here at the open, meaning an open drive or an open test drive at the open or an aggressive move up, unless they do that, we are likely to see the overnight low, and we're likely to see yesterday's low. Okay, that's the expectation for today. No need to draw it. Just remember, we are in the middle of the roll here. We have expiration on Friday. Things are likely to be quirky and jacked up. Prices are likely to get pinned. So the trade is not as normal as it is. I would appreciate it if you hit the like button on YouTube. If you're watching this on the EdgeClear site, just go to the video where it says YouTube, watch on YouTube, click on that, go to YouTube and hit the thumbs up. Be sure to subscribe to the channel and set notifications. I'll catch you tomorrow morning. Take care.